Hello everybody, welcome to Cryptonomy. Today we're going to discuss a very important question that is taking the cryptoverse by storm. Are we going to be on time with the 4-year cycle? Or are we going to finally have the crypto extended cycle that we want? Well, before we answer any question, know that we should go into this with a clean heart. Means imagine you don't have any money invested. You imagine you don't want to invest any money, and let's just analyze it without any bias. That's the best way to make any decision, right? This topic is pretty has a lot of factors that play into it, and we're gonna use some statistics and probabilities and theories and stuff like that, and just keep an open-minded, and I'll try to explain everything along the way. I searched a lot on YouTube on people who can analyze this topic, so I know if I should stay invested or pull out, because I've been invested for around 3 years or something. But what I notice is some more leaning to pull out. And this is why I am actually, this is outdated. I took this screenshot of my coin allocation. This is using CoinStat of almost 85% USDT. All right, now it's closer to 87 or 88. As I'm more studying this, I'm seeing the risks involved. But don't take this percentage as like, oh, yeah, is it for real? Like, is he for 100% bearish? Because I just apply strategies. There is some reasons to be hopeful. And if hope shows more signs, then there are also strategies to easily get involved again. But for now, I'm seeing more risk, around 70% to the downside than the upside. And so this is my coin allocation. The first thing we're going to do, so without further ado, let us jump in. Let us do some analysis. Let us look at the data. Let us have no bias involved and see what history of Bitcoin and as well the stock market says about Bitcoin and what we're going to have. The first thing that we're going to do is actually we're going to analyze the crypto 4-year cycle that has been happening over and over. And then we're going to take we're going to put it into a normal distribution. We're going to get some numbers and statistical data. We're going to explain it. And then we're going to go do the same thing for the stock market, right? Has this 4-year cycle only been for crypto? Have we seen it in the stock market? What can we learn from it in the stock market? And what does it say to Bitcoin, right? And I did some heavy analysis, and I promise you, it does say a lot, all right? There is some great things we can uncover from that. The problem with Bitcoin is we only have 3 past cycles. This is the 4th. So we don't have enough data to have reliable statistics. But if we combine our understanding from what we achieve in analyzing Bitcoin and straight after that analyze the stock market, and we get a more holistic approach. The first thing what we're going to do is we're going to actually extract the dates of every market cycle top in Bitcoin. So I've already done that, but I'm just going to show it to you very fast. So this is around we can say the 8th of November 2021. Let's turn off all past recessions. We're going to talk about that later. Then we take out this one, the cycle number 2, which is 17 December 2017. And we're going to approach this as this is one whole cycle. All right, not 2 cycles. This is 1 cycle, 4 years. That's the assumptions we're going to go with. Here, it's around 30 November 2013. So if you extract all these dates, we can maybe get a percentage and a probability of when we could expect this cycle to end, but based on the assumption that the 4-year cycle is intact, and you know, the trend is your friend till the end when it bend. All right, as the famous Ed Seykota investor says. Can learn a lot from him, right? So we took these dates, 0.1, 0.2, 0.3. We calculated the mean, which we're gonna give it that sign. So the mean of these 3 days is the 29th of November 2025. As you can see, this is the first cycle, the second cycle, and the third cycle, and now we're in the fourth cycle, so we're having a future 0.4, right? And what we're going to do is we're going to take the 1 and 2 standard deviations. All right, so I'm going to explain that very quickly. If you already know this part, you can skip, or as a refresher, it's going to be very fast. So that's the mean, right? That's the 0. That's the mean. We have it as here, 29 November 2025. Of course, 29 November 2025 is not the mean. 2025 is the assumption that this is the fourth year cycle, which is the post-election year. That's every top where Bitcoin had is in the post-election year. All right, the 4-year cycle assumes we have tops in the post-election year. The post-election year in the past was 2013, 2017, 2021, and 2025 is now. All right, so it's a heavy assumption to assume that the Bitcoin cycle is a normal distribution. That's why it's better to use T distribution due to the low number of data points. But I calculated for the D distribution, you get the exact same thing as a normal distribution due to the 3 data points that we have. That's why it's easier to explain it in normal distribution, as people understand it easier. And this is used for populations, for example, age, male, female, your health, like for example, 50% of the people have medium health, for example. Very healthy people are in 0.1%, and very unhealthy people is minus like 0.1% here. For example, that's one example, and usually it does follow these percentages. All right, so all these data points are, for example, if you take it as age, then this is like people in their 30s, 40s, 50s, and 70s, 80s, and like 90s, 100, something like that. And here it goes back, if we assume like 30 is the median, then like 20s here, teens, babies, infants, whatever, or something like that. All right. So let's say this calculates between the mean and 1 standard deviation in that side. Okay, that's 34%. This calculates from the mean to 1 standard deviation forward, which is 34%. We usually all the population, most of the population is 1 standard deviation behind, 1 standard deviation forward to the mean. So total would be around 68.2%. And the same thing applies for 2 standard deviations, right? So between 1 standard deviation and 2 standard deviation, we have 13.6%. If you don't understand this well, don't worry, you're going to get it as we go, but maybe you can also watch some like video, a separate one that explains this much better. We're just going to skip through it. But since humans are traders, it is not a far-fetched assumption that traders do fit in the normal distribution, because human emotions can be fit in a normal distribution, right? Every human characteristic mostly fits in a normal distribution, many things in life as well. All right, so if we get that, then we can also derive from our normal distribution that we made 1 standard deviation date, minus 1 behind, plus 1 forward, minus 2 behind standard deviations, and plus 2 forward. So we can get a chart that looks like that. But imagine this is just with calculating the point here, right? So that would be a date. So minus 1 standard deviation here would be that date right there, 2025, 10 of November. All right, that's one example. So we can put it here in a way where it is more easily, like viewable. We get these percents. So how we calculate minus z here is the standard, the standard deviation, and that's the mean, and that's minus 1, minus 2, plus 1, plus 2, and those are the dates. I'm gonna visualize them all on the chart for you. This is days since from the mean. Earlier, of course, which side is it on, and those are the percents from them. For example, if we calculate from the mean, minus 1 standard deviation is 34%, and similarly for that and forward. Okay, so it's better to just visualize it, right? Let's put it all in a chart and see what probabilities do we get. All right, I've put it all in here. If we go on the daily, we can see, to put it in perspective, right? We can multiply this statistical data with another thing. For example, if I think it's 70%, the top is going to be in that zone. All right. This is what I think. All right. From a lot of analysis. And hopefully I'll be able to share that on YouTube, and then maybe you can make your own percentages in mind, right? This is not financial advice. This is just my own opinion based on research and study and a lot of time on Bitcoin. So I've studied Bitcoin for around 7 years daily. Let's say from here to here, I'll think like the cycle is ending by 70%, all right? Beyond this normal distribution that we got. In the normal distribution, I would believe it's like 40%, you know? I think, you know, Bitcoin, my surprises might end there or might end there. I don't know, 70%. I think it will end somewhere between before a month or two and, you know, for example, I would say like October, since you know, October might be high, October 7th, for example, till January next year, maximum. That's 70% chance for me. So what I would do is I would take this percent, since I think it's 70% outside of it and like 40 to 50% inside. I'll just take 45%, and I would do basically this type, right? I'll explain more what these charts mean, but just so we take any bias out, and it's like, what do you mean, you know, like 47.5 times 0.45. That would be 21.375. So we're going to just round it up to 21.4%. All right. That's what I think for here or here. Between the mean to here. 21% here. Between the mean and here, 21% there. That's what I think. For the other data point, I'll just basically change that with a 34. Nice. Here, if we just get it to 34, and if we just take that, 0.45 by the way, guys. All right, and here similar, 0.45. Get that data, 0.45, we get 15.3%, right? 15.3%. That's the probabilities I think about. And this one corresponds to this area. So if we change that color to maybe that, yeah, just can keep it as that, doesn't matter. This area I think is 15.3. This area is 15.3. And so this whole area would be around 30% for me. All right. And we're going to talk about how I got to these numbers and everything, but that's just a little overview. So, with that in mind, why do we think that this can be true? Or are there any signs actually that this might be true? There are actually many signs visible right now. If you read on Binance is getting a lawsuit, right? I think what happened earlier about the biggest liquidation event in history of Bitcoin, that could be a very top signal. Let's say that can work as a top signal, and we can see the after effects of that. That reminds me of the FTX Luna type of thingy, where there was a lot of problems before about exchanges and stuff, and it just you know, it was the narrative that took crypto down. And of course, it wasn't only narrative; it was weakness in many areas of the economy and, you know, consumer spending. But nevertheless, a narrative helps usually like go down. Before we go and explain how does it relate to the stock market, I'm going to keep that for the next video. But for this video, I'm just going to explain a little bit more about Bitcoin so we can keep it more structured. Yes, I have sold 85%, right? And most of my assets that were sold, I was able to get at those prices. All right. So to give you a perspective, I was investing heavily in this area, like around 50% of my investable amount. I was testing, I wish I bought more there, but you know, like FTX really also scared me a little bit. So I invested a little bit here, but mostly ETH. I was getting into ETH. Little did I know that Bitcoin would outperform it heavily, but yeah, I was investing in ETH there, not Bitcoin. After that, I switched back to Bitcoin here after Bitcoin was outperforming, and I've switched a lot of my ETH to Bitcoin here. Here I continued investing a little bit, but mostly I averaged around 40,000 or something, right? 45, you know, between the 40 to 50,000, my average. So I would imagine a lot of people that invested here or there would be more than happy to sell here and here, all right? Especially when the narrative of the 4-year cycle is ahead of us, right? A lot of people are going to be taking profits, and retail is, a lot of my friends are investing into Bitcoin now, and I tell them, you're just being an exit liquidity. There's two ways to make money in the markets. One way is upwards, one way is downwards, all right? So if the market is more likely to go downwards than upwards right now, then maybe you should, I'm going to teach how to actually how to sell options to make money. So you can use options as a very good tool to actually bet down, not borrow from central exchanges and pay high fees and liquidation, whatever. No, not just options, just so much better. You can, for example, do, you know, bull spreads, bear spreads, and a lot of interesting stuff to get paid to sell and receive Bitcoin at cheaper prices, right? Imagine you put a limit order on Binance, but you get paid on front. That's what options do. You get paid on front for placing a limit order, and that amount of money is not small. So that's a video for sure for the future. I'm not selling Bitcoin or options right now or anything like that. I'm indecisive about the location, the direction of where Bitcoin would fall. But if you imagine this is the bull market trend line, well, we're breaking it right now. Sorry. And my strategy of selling here has turned out very good for me, right? That doesn't mean you're late. I think selling here is also a very good price. Just to give you a perspective, Bitcoin can go down a lot and fast, right? And I think the next bear market is not going to be 70% or 80% decline. I think it's going to be like more shallow, as 40, 50% or something like that, because of lower interest rates and increasing money supply, right? If you actually look at the money supply versus the S&P as well, you see the whole picture will start to be created in your mind that this is a very high risk situation, trade, and time to be in crypto long. Because not only does that, and soon we're going to be talking about the stock market, go in line together, but also the money supply if you take the stock market over the world money supply, then you get a chart that looks like that, and we're going to be talking about it soon in the third part of the video. So yeah, what's my strategy? My strategy is I'm out, I'm happy, all right? My strategy is I'll start selling Bitcoin options if Bitcoin continues to, stay below that line, right? So you can see we have been bouncing off that line many times to continue the bull market. 1, 2, and 3. And by the way, that's a fib channel, all right? So that's not any just trend. It's a fib channel, upward channel. So fibs are reliable, as everybody knows. These levels are crazy reliable, but we cannot only use them as, like it's vertical, but you can use them as trends. That was the bear market territory. I believe that banana zone, well, the small banana zone started somewhere here. And this is why I believe that this is the bull market support line. And if you pull out another indicator, it's the bull market support line. A lot of people talk about that as well. Well, we're below it. And if we stay below it for a while, then I would confirm the bear market territory if we stay also below that line, and also the 50-week SMA. And right now we're 50-week SMA. If we pull it out, moving average simple, yes. And if we change it to 50-week, close, none. And let's just maybe make it, if we style, let's make it more thick. All right, let's put it, yeah, blue is fine, whatever. All right, so if we have multiple weekly closes under the 50-week SMA, the bull market support band, and this fib channel red line, I'm definitely shorting Bitcoin. But if we reclaim, right, if we reclaim those important lines and we start doing an upward movement, higher highs, I will be definitely going back 50% of my portfolio, or maybe more, in here. All right, if we see some strong movement to the upside. I just don't want to sell at cheaper prices, but I'm more than happy to buy at higher prices, more than happy. But I'm not selling cheaper prices. All right, and if you tell me, okay, I'm thinking about investing 1,000, 2,000, or 2,000-3,000. What should I do in that situation? I have not, taken profit. I'm thinking of investing. I would say do the same thing, right? Just don't be investing and go down, right? Invest on the way up. That's what I've been doing this whole time. So every time it goes up, I would invest. If it makes me money, I add more money. If it makes me money, I add more money, and slowly I just exponentially add more and more and more, right? But don't buy on the way down. Don't buy in a zone that is very, very risky, of high probability chances of actually. So if you completely sum up this 47%, 47%, so 21%, I would say that the chance of actually declining on that zone would total a 42% chance. That's too high for me. And of course, this is not including the zones outside. As I said, that's 70% for me. So I'm going to keep this video short and sweet. If you're interested in this topic and you want to see the same normal distribution applied to the stock market and comparing it exactly to the Bitcoin market cycles and getting a more complete picture with statistics, with probabilities, with numbers, with recommendations, then watch part 2 of the series.